All right, folks, get those taste buds ready. Today, we're serving up a deep dive into restaurant taxes in Saudi Arabia. If you're dreaming of opening a restaurant there, this deep dive is going to be like your secret ingredient to navigating that whole tax landscape. We've got excerpts here from a guide on the Restaurant Success blog. It's by Menuviel, and we're going to break it all down, everything you need to know so you can make sure your restaurant is a success.
It's interesting. The Saudi tax system is really pretty diverse. It's not just one or two simple taxes. There's a whole menu of levies. Each one has its own little quirks.
Okay, so let's start big picture here. What are the big major taxes that a restaurant owner in Saudi Arabia would need to be aware of?
Well, you can think of it like a recipe. You've got your essential ingredients, right? First, you've got VAT, or value-added tax, which is a consumption tax. Then there's Zakat, that's a religious wealth tax, and that's specifically for businesses that are Saudi or GCC owned. And then for foreign investors, like you, there's corporate income tax.
So depending on how you structure your business, you might be dealing with a different set of taxes. That's interesting. But I have to ask, are there any common misconceptions about these taxes that trip up new restaurant owners?
Oh, yeah, definitely. One of the biggest ones is about VAT. People think it only applies to dine-in service, but actually it applies to all restaurant sales. Dine-in, takeaway, delivery. If you don't understand that, you can end up with some serious financial headaches.
So no matter how your customers are getting their food, VAT is always on the menu. Now, our source mentions that VAT is a 15% tax. Can you break that down a little bit? How does that work in practice? Do restaurants just add 15% to the price of every dish?
Well, there are a couple ways to handle it. Some restaurants include VAT in their menu prices, so the customer sees the tax-inclusive price right up front. Others list VAT separately on the receipt, just to be transparent.
So if a restaurant goes with inclusive pricing, a 100 rial dish would actually be listed at 115 rials on the menu.
Exactly. And it's important to remember that the restaurant, they collect that VAT from the customer, and then they pay it to ZDTCA, the Zakat Tax and Customs Authority. So it's like they're acting as a middleman for the government.
And how often do they have to make those payments to ZD by CA? Is it a one-time thing, or do restaurant owners have to file regularly?
It depends on the revenue of the restaurant. If you're running a bigger place, you'll probably need to file monthly VAT returns. But if you're starting smaller, you might be able to file quarterly. That's one reason why having a good accountant can be a lifesaver, especially when you're starting out.
Speaking of starting out, what about VAT registration? Is that something our listener needs to do right away?
VAT registration is mandatory once your annual revenue hits a certain threshold. And the process is actually pretty straightforward. You gather the necessary documents, like your commercial registration, bank details, apply online through the ZATCA portal, and once you're approved, you'll receive a VAT certificate to display at your restaurant.
Okay, so it's important to stay on top of that revenue threshold. What happens if a restaurant doesn't register for VAT when they're supposed to?
Well, if you don't comply with VAT regulations, you can face some pretty hefty fines. In some cases, it could even disrupt your business operations. Definitely not worth the risk.
No, that makes sense. Seems like being organized and proactive is really key when it comes to VAT. Now let's move on to the next ingredient here, Zakat. Our source says it's a religious wealth tax. Can you tell us a little more about that?
Sure. Zakat is really deeply rooted in Islamic tradition. It's a core part of the tax system for businesses that are owned by Saudi or GCC nationals. It's interesting because unlike VAT, which is based on your sales, Zakat is calculated on your net worth.
So instead of looking at how much money the business is bringing in, Zakat focuses on the overall value of the business.
Exactly. It's kind of like taking inventory of everything your restaurant owns. Equipment, inventory, cash on hand, the whole shebang.
Yeah.
Then you subtract any liabilities or debts that you have. The Zakat rate is 2.5% of what's left, that remaining net worth.
So for Zakat, we're looking at the bigger financial picture of the business, not just those sales transactions. And this only applies if our listener partners with a Saudi or GCC national, right?
That's right. Since our listeners coming in as a foreign investor, they'll probably be dealing with corporate income tax instead of Zakat.
Which brings us to our next topic, corporate income tax. Can you give us a quick rundown on that one?
Sure. Corporate income tax is specifically for businesses that are fully or partially foreign owned. It's a flat 20% tax on your profits. So unlike Zakat, which is based on your net worth, corporate income tax only looks at your profit margin.
20% of your profits, that sounds like a lot. Are there ways for restaurant owners to reduce their corporate income tax liability?
There are some strategies you can use. For example, incorporating your business within Saudi Arabia could give you some tax advantages, but that's maybe a topic for another day. In terms of deductions, you can deduct operating expenses, things like rent and salaries. You can deduct depreciation on equipment. And you can even deduct losses you carried forward from previous years.
So keeping really good records of all those expenses is absolutely crucial.
Absolutely. All those receipts and invoices are like gold when it comes to reducing your tax burden. Speaking of records, we should talk about filing deadlines. How often do owners have to file for corporate income tax?
And is it the same for Zakat?
Corporate income tax is typically filed annually. Zakat follows the lunar calendar, which can be a little tricky to keep track of. Missing those deadlines can mean penalties, so yeah, staying organized is really important.
Okay, so we've got these three main taxes: VAT, Zakat, and corporate income tax. It sounds like understanding how your business is structured and keeping great records are really essential. But is that the whole story? Are there any other taxes kind of lurking in the kitchen, so to speak?
Well, there are a couple more ingredients to add to our little tax recipe here, and they can be just as important as the main courses.
Ooh, I love a good side dish. What are we talking about here?
We're talking about municipal fees. Those are imposed by local governments. And we've got excise taxes. Those target specific items. These might not be as flashy as the big three, but they can definitely have an impact on your bottom line.
It sounds like we've got a lot more to unpack. Let's take a deep breath and dive into those municipal fees and excise taxes after a quick break. Stick with us.
Welcome back. Before the break, we were just starting to talk about those side dish taxes, the municipal fees and excise taxes. Let's start with municipal fees. Can you give us an idea of what those are all about?
Yeah, so think of municipal fees kind of like a local cover charge. For doing business in a specific city or region, they cover all sorts of things, like health permits and safety permits, operating licenses, waste management services. Basically, they're essential for running a restaurant legally. And the thing is, they can vary a lot. It all depends on the location and how big your restaurant is.
So doing your homework on a location isn't just about, foot traffic and demographics. It's also about understanding the local taxes. That's a great tip for our listener. Absolutely. Imagine finding the perfect spot for your dream restaurant, and then you realize that the municipal fees are going to eat up all your profit. It's so important to factor these costs in right from the start.
Okay, so location is a big factor for these fees. What about paying them? Is it a one-time thing, or is it an ongoing expense?
It's usually a bit of both. You'll have some upfront fees when you're first setting up, like getting your operating license, and then you'll have some recurring fees, like permit renewals every year or waste disposal every month.
And I imagine these fees are paid directly to the municipality.
Right, exactly. And a lot of municipalities now offer online payment options, which can make things a lot easier. But even though it's digital, it's still really important to keep good records of all those payments.
Got it. So stay organized even when you're paying online. All right, let's move on to those excise taxes. Our source mentions that these are targeted at specific items. What kind of items are we talking about here, and why are they being taxed?
Okay, so excise taxes are usually used to discourage people from buying things that are seen as unhealthy or harmful. For restaurants, the main things to watch out for are sugary drinks and tobacco products.
So if our listener is thinking of offering sodas, specialty coffees, or even shisha, they need to factor in those excise taxes. What are the rates like?
They can be pretty significant. There's a 50% tax on sugary drinks. So that includes sodas, energy drinks, and even some flavored juices. And for tobacco, it's a 100% tax.
Wow, 100% on tobacco. That's going to have a huge impact on pricing. How do restaurants usually handle that? Do they just absorb the cost, or do they pass it on to the customer?
It really depends. It comes down to their pricing strategy and their target customer. Some restaurants might try to absorb part of the tax to keep prices low, especially if sugary drinks are a big part of their sales. Others might just pass the whole tax on to the customer.
And transparency is key here, right?
Yeah.
Customers should know what they're paying for.
Absolutely, yeah. You need clear labeling. Whether it's included in the menu price or listed separately on the receipt, customers should understand how those taxes work. It helps build trust and avoid any confusion.
Okay, so we've got these extra taxes to consider: municipal fees and excise taxes. And it sounds like a clear pricing strategy and transparency are essential. But thinking about all these taxes and regulations makes me wonder, what happens if a restaurant makes a mistake or misses a deadline? Are there penalties?
Yeah, unfortunately, the Saudi tax authorities are really strict about compliance, and there are definitely consequences if you don't follow the rules.
Oof, I can imagine. That's not something you want to deal with. So what are some of the common mistakes people make, and what can our listener do to avoid those pitfalls?
Well, one of the most common ones is just missing a tax filing deadline. Life gets busy, especially when you're running a restaurant. It's easy to let things slip, but the consequences can be serious, like big fines or even disruptions to your business. Setting reminders and using online tools can really help with that.
So staying organized is key. Any other potential problems?
Another common issue is underreporting revenue. That can happen accidentally if you're not keeping track of all your income sources. Things like cash transactions, late-night deliveries, catering for special events, even tips. You need good systems in place to capture all of that.
So it's not just about recording those big dine-in orders. It's about every single rial that comes in.
Exactly. And another thing, applying VAT correctly can be tricky. If you don't charge the right VAT rate or collect it on every sale that it applies to, you can face penalties. It's super important to understand the rules and make sure your staff is trained properly.
Okay, so late filings, underreported revenue, VAT issues. Anything else?
Not registering for VAT or Zakat when you're supposed to is a big one. The tax authorities can track revenue, and if you're trying to avoid paying what you owe, you're going to get caught.
So no shortcuts there.
Yeah.
It sounds like honesty and transparency are really the best approach. But let's say our listener does everything right, but a mistake still happens, and they get hit with a tax penalty. What should they do?
First things first. Read the penalty notice carefully. Understand why you're being penalized, which tax it's for, and what you need to do next. It's important to know what you're dealing with.
Okay, so no need to panic. Just gather information and figure out your next steps. What if the penalty is just an honest mistake, like a miscalculation or a late filing?
In that case, you need to fix the situation right away. You might have to submit some missing info, file an amendment, or provide extra documents. The important thing is to be proactive and show the tax authorities you're taking it seriously.
And I'm guessing paying the fine quickly is important too.
Definitely. If you delay payment, you'll usually just end up with more interest and penalties. And that's the last thing you want when you're trying to run a business.
Right, so be proactive, pay promptly, and learn from the experience. Now, what if the situation is more complicated? Or maybe the restaurant owner just isn't sure how to handle it.
In those cases, it's always a good idea to talk to a tax advisor. They can help you figure out the process, understand your options, and maybe even negotiate with the tax authorities for you.
It's like having a tax lawyer on your side.
Exactly. They can help you avoid those legal and financial problems that can really hurt your business.
All right, so we've talked about potential penalties and how important it is to act fast if something goes wrong. But let's zoom out a bit and talk about the big picture. Staying compliant with all these taxes, it seems like a lot to keep track of.
It can feel overwhelming, yeah. But it doesn't have to be a disaster. With the right system, you can make tax compliance pretty simple.
Okay, I like the sound of that. What are the secrets to this system?
It all starts with really good record keeping. Think of it like keeping your kitchen spotless. Everything has its place, and you can always find what you need.
I like that analogy. So what specific record-keeping practices does our source recommend?
The most important thing is to track your sales and expenses every day without fail. Invest in a good POS system, one that records every transaction accurately, whether it's dine-in, takeaway, or delivery. And don't forget about cash sales. You need to track those just as carefully.
So no more scribbling orders on a notepad. It's all digital these days.
Exactly. And when it comes to expenses, keep all your receipts and invoices organized. They're what you need to prove your deductions and stuff, so treat them like gold.
Okay, so digital sales records, organized receipts for expenses. What about reconciling bank statements? Should our listener be doing that regularly?
Absolutely. It's like double-checking your recipe. It makes sure that everything matches up and helps you catch any mistakes early on.
So it's all about being proactive and staying organized. But technology can help with all this, right?
Oh, yeah, for sure. There are some great tools and platforms designed to make tax compliance easier for businesses.
Like what?
Well, the ZATCA online portal is a game changer. Businesses can use it to register, file their taxes, make payments for VAT, Zakat, corporate income tax, all in one place. It's super convenient and easy to use.
So no more paper forms and trips to the tax office.
Well, you might still have to interact with ZATCA sometimes, but the portal takes care of a lot of the routine stuff.
And what about accounting software?
Oh yeah, programs like QuickBooks or Xero can be lifesavers, especially if you find one that integrates with your POS system. They can automate so much of the tracking process, from recording sales to generating reports for tax season.
How much easier than inputting everything manually.
Exactly. And a lot of those programs have features specifically for VAT, which is really helpful. And then there's GOS, the General Organization for Social Insurance. They also have their own online platform.
Hold on, GOSI. We haven't talked about that yet.
Yeah.
What is GOSI? And how does it fit into all this?
Ah, that's our next course. Social insurance contributions are a really important part of the tax landscape. Understanding GOSI is essential for any restaurant owner in Saudi Arabia.
Okay, I'm intrigued. Let's dive into GOSI and wrap up this deep dive into restaurant taxes in Saudi Arabia. Welcome back. We're ready to serve up our final course in this deep dive. It's all about GOSI, the General Organization for Social Insurance. So what is GOSI? And why is it important for our listener who's, thinking about opening a restaurant in Saudi Arabia?
You can think of GOSI as a safety net for employees. It provides all sorts of Social Security benefits, things like retirement pensions, disability coverage, survivor benefits, that kind of thing. As a restaurant owner, you'd be responsible for paying into GOSI for your employees, both Saudi nationals and expats.
Okay, so this is separate from the other taxes we've been talking about, like VAT and corporate income tax. This is specifically about employee benefits.
Exactly. It's part of the Social Security system there. And it's not just about the benefits. It's also about making sure employees are protected, their rights are upheld.
So how does this work in practice? What steps does our listener need to take to comply with GOSI?
First, you'd have to register your restaurant with GSI. Then you'd register each of your employees no matter where they're from. After that, you're responsible for making monthly GOSI contributions for each employee.
And how are those contributions calculated? Is it like a flat fee?
Mm-hmm.
Or is it based on the employee's salary?
It's a percentage of their salary, and it's shared between the employer and the employee. But the exact percentages are different for Saudis and expats.
Can you break down those percentages for us?
Sure. For Saudi employees, the total is 22% of their salary. The employer pays 12%, and the employee pays the other 10%. For expats, the employer contributes 2%. That's to cover workplace injury insurance.
So on top of salaries and all those other taxes, restaurant owners need to budget for these GOSI contributions as well.
It does add up, yeah. But it's important to remember these contributions aren't just a cost. It's an investment in your employees. And it's essential to comply with Saudi labor laws.
I imagine there are penalties if you don't comply with GOSI.
Oh, absolutely. The Saudi government takes this very seriously. Late payments, inaccurate reporting, not registering employees, all of that can lead to fines and other penalties.
Another reason to stay organized and on top of things. Well, we've covered a lot of ground in this deep dive. From VAT and Zakat to municipal fees, excise taxes, and now GOSI. As we wrap up, what are some key takeaways for our listener?
I'd say the biggest thing is the Saudi tax system is complex. There are multiple taxes to consider. Each one has its own set of rules. Really understanding the ins and outs of these taxes is super important for making good business decisions.
And it sounds like getting advice from experts, like accountants and tax advisors, is a really smart move.
For sure. They can guide you through the whole process, help you stay compliant, and maybe even find ways to reduce your overall tax burden.
Any final thoughts for our listener?
I think it's important to remember, as you're putting together your business plan, these taxes aren't just expenses to worry about. They're part of your long-term financial strategy. You need to factor them into everything. Your pricing, hiring decisions, even your location. It's all connected.
That's really great advice. It's not just about compliance. It's about managing these taxes strategically so you can build a profitable and sustainable business. Well, there you have it. We've explored the world of restaurant taxes in Saudi Arabia, from A to Z, so to speak. We hope you found this information helpful as you prepare to launch your exciting culinary venture in Saudi Arabia.
Best of luck.
Don't forget to join us again for more insightful deep dives into other topics that matter to you. Until next time.